Today, we're diving into the latest updates on SoFi. We'll dissect recent data points, analyze short activity, and cover everything you need to know. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi saw a rise of 1.93%, peaking at $7.50 and dipping to $7.29. Given today's PCE data, it was unlikely to surpass $7.50, a notion supported by open interest levels. Market makers likely played a role in this outcome, but despite the challenges, SoFi moved in a positive direction. Despite some negative sentiment, SoFi has performed relatively well, especially over the last month, where it has risen by 14.71% compared to a drop in the S&P. Today, there was no significant news or SEC filings about SoFi. However, the charting over the past month shows a positive trend. Looking forward to their earnings, many expected SoFi to hit $8, $9, or even $10, but market manipulation, particularly on Fridays, seems to have impacted this. I'd love to hear your thoughts on SoFi's performance and today's PCE data, which came in slightly hotter than expected. The price index hit 2.6% versus an anticipated 2.5%, leading to market-wide volatility, not just affecting SoFi. This recent PCE update has shifted expectations, with an 11.9% chance of a 50 basis point cut at the September 18th meeting, marking a significant catalyst for the broader market and SoFi's specific earnings. No new articles or analyst ratings have emerged recently, so SoFi has been riding the broader market wave. Regarding short activity, shorts have been erratic. Yesterday, they doubled down, and today, they returned 150,000 shares. Currently, 17.04% of SoFi's free float is being shorted, translating to 176.93 million shares.
Utilization stands at 58.12.
With a short score of 72.09. Social media buzz about a potential squeeze around SoFi's earnings is prevalent, but the data doesn't strongly support this. SoFi's earnings are set for the 30th, pre-market, leaving just one trading day. The earnings per share estimate is 1 cent, with a revenue estimate of $566.69 million. Analysts have made 3 positive and 5 negative revisions over the last 90 days, showing good growth. Projections for Q2 2025 suggest significant year-over-year growth of 145%, with consistent revenue growth expected through 2026. CEO Anthony Noto has hinted that rate cuts could propel SoFi higher, but significant beats in the upcoming earnings seem unlikely. Member growth correlates with website views, which have been stagnant in Q2, potentially indicating lower member growth. This could unsettle the broader market if SoFi fails to deliver its typical high double-digit growth. Do you think SoFi's upcoming earnings will trigger a squeeze, or will it mellow out? Personally, I believe SoFi will continue to post strong earnings, and shorts will exit naturally without a dramatic squeeze. Options activity around SoFi has been notable, with $4.5 million in calls and $1.25 million in puts. Sentiment-wise, 51% of options are bullish, with many betting on SoFi reaching $9.50 by next week, encompassing their earnings. On the downside, puts suggest a low of around $6, indicating a wide range of expectations. With SoFi closing at $7.42, significant open interest exists at various price points: $10,000 at $7, $4,000 at $6.50, and $2,000 at $6, which will influence Monday's activity. Ideally, SoFi would have closed above $7.50 or even $8 for a stronger impact. But the current situation is still manageable. Large transactions in the secondary market, including a notable $15.55 million after-hours trade, indicate substantial institutional activity. This suggests institutions are managing risk, possibly due to PCE data not aligning with expectations. We'll have to wait and see how this unfolds. $7.50 was a crucial pivot point for SoFi, and with it closing at $7.41, it's trading between key support and resistance levels. The stochastic indicator at 58 suggests a neutral position, not overbought or oversold. Retail investor activity has been rising, adding a positive sentiment. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.